and welcome to the excuse me, Daily Energy Markets podcast. It is the 7th of March, and Brent crude oil is trading up in Asia this morning at 86.52. It's had a sort of an upward week, given I think some sense of positive outcome or positive signals, if you like, the markets are taking. Today we have the Fed chairman in front of the U.S. Congress, and it would appear that the financial markets are expecting him to deliver more punch in the punch bowl, as the saying goes, to keep everybody happy with the fact that he's not going to be a draconian hawk. So financial markets are running away. Let's kick off in Asia this morning with our regular commentator, Narendra Taneja, India's leading energy expert. Certainly looking at India, Narendra, that would be enough reason to see oil prices climbing. The economy there seems to be going from strength to strength. Nothing is derailing it. Even interest rates are not having an impact on India. We're seeing Indian housing market is remaining resilient despite the higher interest rates. Your outlook for India as we move to the end or towards the end of this fiscal year, of India's fiscal year?
Well, you see, I mean, when you look around and look at, indicators and parameters and the sentiments in different parts of the country, whether the southern part or western or northern, even parts of the eastern, part of, it's great. I mean, the airports are full, rail stations are full, people are traveling like crazy, and demand for petroleum products is kind of, back, not only to back, but is actually doing better than pre-COVID. And at the same time, when you look at investor sentiment, they are also going great, despite the fact that Adani episode was a bit of a, puzzle for many people, but sentiments are more or less back to normal. We just few days ago hosted G20's foreign ministers conference, and there were similar other events in other parts of the country in connection with India hosting G20 this year. So, I mean, wherever you go, sentiments are great. There was an energy meet in Bangalore just a few days ago, and there again we saw the big bosses, the big boys of oil and gas and renewables, descending and all committing investments in India and looking at the picture, very, very optimistic, in an optimist manner. So I think overall sentiments, if you come to India, it looks like things are great. I mean, if you look at the world from New Delhi, except for Ukraine, I mean, the picture looks good. At least a lot of optimism, but we are aware of the realities in different parts of different geographies. But as far as India is concerned, very self-confident, very sure of how things are going to shape up, and very sure that we are well on our way first to become $5 trillion economy on nominal basis, and eventually $30 trillion economy at par with the US in time to come in about 25 years.
Well, certainly all moving in the right direction. Matt Stanley, partnerships lead, Middle East Kepler. Matt, we had a sense that the Chinese GDP growth target number for 2023 was announced over the weekend at 5%. It was somewhat underwhelming. A bionic recovery for China was sort of greeted with a sense of bearish sentiment. But then we had the Saudi OSP's second month in a row up plus $2.50 over dated Dubai. Your thoughts on those two things happening at the same time? OSPs from Saudis into Asia with a bumper premium, and yet the China growth target not so the lowest in 30 years, basically.
Yeah, morning, Sean. Unlucky Sunday. I didn't want to raise it, but I just thought it's we're talking about convergence.
We won't talk about the war.
Oh, it's just cheap. Sorry. No, you're right. Look, Saudi OSPs, they're looking more and more at growth areas where supply is going to go. Russia overtook the US in terms of long ton miles yesterday on vessels because so much material is going east now from Russia, and the Saudis want to keep up. I mean, the China growth story, I'd argue.
How do you keep up, Matt, if you charge $2.50 premium over Dubai when the Saudis are charging probably 20, or the Russians are charging, $20 below Dubai?
Well, that remains to be seen, because the oil price cap is not in place for China. So look, it's very much a story regarding where they can secure supply from. The Saudis are going to try and compete as much as they can, but ultimately the crude slates work into the European refining system. So, it's just about a change of dynamic in that regard. The China story regarding growth, I'd argue, is one that ran its course for the last 2 decades. 5%, around 5% growth is still somewhat stellar compared to other parts of the world. Numbers came in this morning. Iron ore imports were up. Coking coal imports were up. So that, the steel producers in China are obviously gearing up for demand to come back. But crude oil imports were lower, around 1 million barrels a day lower than December. Now, the numbers are somewhat skewed because it was January and February. So it was still, the sort of 3-month lead time that you need to buy a cargo of crude. So I still think it's a bit early to apply those numbers that China are sending out as to whether Chinese demand is back. I still think we've probably got another month there. But the convergence between what's happening with Saudi OSPs and China, are they linked? Perhaps, but I'd say that the Chinese story regarding GDP numbers, it's still too early to apply one against the other.
Let's welcome Yusar Al-Maliki, Gulf analyst at the Middle East Economic Survey based in London. Yusar, you were mentioning IE Week before we came on. What are your takeaways from there? The circus, of course, has moved to CERAWeek in Houston. And we saw overnight a lovely dinner between the OPEC Secretary General and the shale oil producers, reported by the different news agencies, that we were all very concerned about supply tightness. Should OPEC Plus and all of its associate producers in the shale of the US patch be concerned about supply tightness?
Well, I mean, thank you very much, Shaun. Well, at the moment, this is we are in the first half of the year, and as all forecasters have said before, and as the consensus goes, we are in the surplus part of the year. But the concern is for the second half of the year, and as China comes in, and again I have to agree with Matt, there should be a pinch of salt on some uncertainty on whether China, whether there will be a need for reopening may take months. Some things, reimposition of some restrictions may be required, but again the momentum in China is building up. But China supply from Russia, again, the Russians are saying that they are going to cut a bit of supply. So these are the dominant themes right now, whether you are in London for IE Week or whether you are in Houston for CERAWeek. But just to answer your question, I think OPEC Plus and OPEC in particular wants to keep the current agreements going to the end of the year. I think part of it is perhaps OPEC believes that some of the non-OPEC supply is coming to the market and will rescue it. The last time I looked at the the monthly oil report from OPEC, they were thinking of 1.44 million barrels per day that will come from non-OPEC countries. But again, there is a lot of uncertainty about all of that gain. They believe that it is going to come mainly from the US. So again, there is a lot of common interest at the moment, but there are lots of caveats to that in terms of the tightness of the fracking market, in terms of the US companies have run out of ducks in a way, but still they are quite bullish on the Permian, big companies like ExxonMobil and Chevron. So by the end of the day, I think everyone is at a stage where we are looking at a stable oil price for the first half of the year, 80 to 85. We are still there, unless the Russians pull a big surprise and indeed this month cut 500,000 barrels per day. I think things are as is. We're looking at Russian supply, we're looking at Chinese demand, and we are looking at OPEC that is not going to change course. And I think this also brings some sort of stability to shale producers in the US, because these are figures that they could work within, especially on oil price.
Narendra, the other issue that isn't going away, we thought we had kind of sort of moved beyond it a little bit, and that is the sort of rhetoric between Washington and Beijing. It seems to be once again moving into a sort of elevated state of hostility, and certainly yesterday was one of those days. We had the first news conference by the new Chinese Foreign Minister, Qin Jiang, on the sidelines of the National People's Congress in Beijing, where he essentially challenged, warned, or whatever word you want to choose, the US against conflict and confrontation with China if they continue to try and restrain and constrain China. What are your thoughts as we move forward with that growing sort of face-off between Beijing and Washington and its impact for market sentiment?
Well, interesting question. Like we just saw 48 hours ago in New Delhi, the meeting of Quad. Quad, as you know, is a kind of loose alliance between the United States, Japan, Australia, and India. Is kind of targeted to make sure that the Indo-Pacific region, remains stable and prosperous. These are all democracies, and of course, China says that it's all against China, and of course, these four members of the Quad say no, it's not against China. So, but I leave it to your viewers to basically to conclude what they think of it. But the question is that I think this will continue to grow because a prosperous, stable China is in India's interest. Prosperous China is also in Asia's interest, in the global economy's interest. But that said, at the same time, when you look at the security environment and some of the kind of policies coming out of Beijing under the president are such that countries like the United States, Japan, Korea, Vietnam, India, they kind of perceive that as a threat. That China is basically has emerged as a threat for the entire region, right from Canada and the United States to India and down even to Indonesia, even Singapore. So that's the kind of perception which is gaining traction. Now, both China needs to do something about it. In the sense seems to be to address it. Why people are thinking the way they are thinking, and at the same time, we have also seen that the kind of close relations between Moscow and Peking, Beijing. That's also is kind of area which worries countries like India and also the United States. So somebody needs to bring the war in Ukraine to an end so that the world can focus more on this part of the world, that's Indo-Pacific, because that's what is the energy gravity center and a global global economy gravity center. But my sense is this is only going to grow. You're going to see more polarization in our part of the world. That's between the United States, Canada, and India, the entire Indo-Pacific region. You're going to see polarization first. You're going to see polarization in terms of energy, in terms of security issue, even in terms of economic alliances, and eventually kind of more geopolitical, which is already happening, taking shape. So my sense is, one, we have to learn to live with it. We have to learn to live with this aspect that look in the 20, 30 years, next 20, 30 years are all going to be about this region, more fraction than friendship, more noise than peace. And so world, basically countries like Japan, India, Australia, United States, Canada, they all have to prepare, even Russia. It's not that Russia is their natural ally of China, because there are serious kind of, there is a huge trust deficit between the two countries. So that's precisely the reason that, India wants, and that's our call in G20, we want an end to war in Ukraine, because a very weak Russia would fall into the lap of China. And that would be a bad news for India, the United States.
Well, I think that's clearly happening, and inevitably that China-Russia axis, whether it's military or whether it's just an overarching one of trade and energy partnership, is clearly a growing reality. Matt, speaking of Russia energy, a month ago, when Saudi raised its OSP for Asia, was a little bit of a surprise given the outlook at the time. Now, and then a few days later, we had the Russians announce their oil production cut, which it's hard to extrapolate how much that has sort of unfolded, but nonetheless, the announcement of Russia cutting its production came a few days after the Saudi OSP. Here again, we have Saudi raising OSPs a day or two after the Chinese have signaled a somewhat weaker than normal economic forecast. My question is coming around to, could we expect another Russian output decline, whether chosen or forced, that Russian production is going to have this challenge of maintaining the level we saw in 2022, and we could see more restrictions of Saudi or of Russian exports?
No, I think that's a good question. I think, you know, Mike Muller, you said on Sunday, made a really good point that technically Russia have proved themselves capable to be self-sufficient. And look, you know, we have ways and means at Kepler of looking at things. March exports of Russian energy globally is scheduled to be at 258 million barrels. Now you compare that to October 2022 and it's 210 million barrels. So exports have increased dramatically. They really have. And going to Narendra's point, you know, look at India. India is booming. You know, we were at the airport. We were in London last week. London was busy. I felt like a tourist. Dubai airport was rammed. You know, the world wants to get busy again. And Africa is certainly a hub that you know, the world is looking at. 1.6 billion people, growing middle classes, you know, and a lot of the Russian energy, we're looking at how it's being sold now. You know, India last month imported just under 58 million barrels of Russian energy. Now, the 3-month average over the last 10 years has been 5 million barrels for a month. So it's increasing dramatically. So when you've got a cheaper feedstock, regardless of where it sits on the moral compass or the political agenda, it's irrelevant. When you are a net importer of energy, you go where the cheapest feedstock is. And India's imports are certainly ramping up. As I said earlier on, and yes, I said as well, it's still to be seen with China. You know, it's a 2-month delay. It's a 2-month backhaul that you'll see. The real question will be, Sean, in the next 2 weeks is, how is Europe surviving? Yes, of course, the stories around nat gas stocks are good. And, you know, that's really driving the inflation argument down. Granted, it's been a mild winter. March was, mind you, I didn't feel too warm last week when I was in London. I was freezing cold. Let's go and buy a coat. But regardless of me, it's going to be critical about where Europe are going to getting their diesel from. Flows and trading hubs are changing and evolving all the time. Turkey is going to be probably, I would argue, Europe's biggest supplier of diesel, and they don't really provide any diesel. It's just the hub that has emerged for Russian energy to go back into Europe. Morocco, Tunisia, these places that were fairly dormant on the energy roadmap are now thriving because they're new conduits where you know, people can look at circumventing. No one really knows enforcement. No one really knows if that is indeed a new trading pattern, but Europe needs the oil. And at the moment,
Saudi Arabia certainly feels that they can be very confidently raising prices into Asia at a time when you would think the opposite, given the amount of discounted Russian oil. But they may see things that we don't see about the outlook for Russian oil. We'll have to keep an eye on that. Yasar, the other story that broke over the last few days that we actually discussed ourselves at the podcast commentators lunch last week was the outlook for harmony within OPEC through the rest of this year. And there were some differing views on that. But there, in the aftermath of our conversation, the story broke that the UAE was considering leaving OPEC. And that was the reporting by the Wall Street Journal and then picked up by all the other news organizations. Interestingly, on the news, oil prices fell $2. The fact that UAE or OPEC Plus could be weakened or could become marginalized if the UAE was to leave, that was worth about $2 on the barrel. Didn't seem too dramatic. And then, of course, it recovered once the story was denied. But no smoke without fire. We all know that this is a big year in which OPEC Plus has to find a new agreement before the end of the year, and that will have to include revisiting quotas. Your thoughts, Yasar, on this story? You give it much credence? What is the outlook for that, do you think?
I mean, far from it when it comes to credence. I think there is lots of speculation and also exaggeration when it comes to any of the core OPEC members leaving. So you have to understand, I come from Iraq, by the way, and we are a founding member of OPEC, and there is a lot of prestige politically for being, part of OPEC, and a lot of history attached to that. But all of that aside, there is also a pragmatic gain from being part of OPEC, which is, price setting, supply control, and not control, let's say, impacting supply and so on. In terms of the UAE, I think the UAE is rightly concerned. The UAE has been investing billions of dollars into growing its own capacity. Looking forward, they have brought forward their 5 million barrels per day capacity target from 2030 to 2027. So these grievances are rightful. By the end of the day, you do not pay all of that money for that capacity for it to sit idle. And this is quite a drastic difference to some of the existing OPEC producers who have been underproducing due to losing capacity. So in a way, this is a positive thing. When it comes to baselines, and generally speaking, baselines have to be re-looked at, and this is something that OPEC has been pushing. And perhaps the UAE, was quite successful in pushing for some sort of a renegotiation back in mid-2021. And perhaps this is the beginnings of such a renegotiation. I believe truly that, the baselines will have to be looked at, I think, mid-2023 or end of 2023, if, OPEC decides not to change course on the cuts themselves. Now, the political side to this, and I think this is quite important because so many people are looking at this from, competition within the GCC and so on. I'm believing far from it. I think there is no rift. I think a rift is exaggerated a bit. I think the GCC countries are more aware of the importance of political unity at the moment, especially given how divided the international community is with the Russian invasion of Ukraine. And GCC countries are very keen not to see what happened with Qatar happening again. So these are very important considerations. And I think the UAE is very capable diplomatically, and they will be able to get a fair share, in the upcoming months.
Well, it's certainly a subject that's not going away as we move closer to the end of the year. The idea of quotas coming into alignment with production capacity, not some distorted fiction, which will make it lack credibility if nothing else. Let's go to the survey question, which is sort of looking ahead to the second quarter. Which will win in setting the direction for oil markets in Q2? Bull supply concerns, the idea, this narrative of the year of two halves, that there isn't enough oil around, and yet there always seems to be plenty. The bear, we've got the Fed meeting today. Is Jay Powell going to continue to have to remind the financial markets that he really is serious about combating inflation and getting it to 2%, or is the markets continue to not believe him and that he doesn't have the stomach to stay the course? We're going to learn if he continues, obviously, to raise rates, and the ECB and the Bank of England, then G7 economies are moving closer and closer to recession, or neither. We're going to stay in the 80s, this kind of middle of the ocean where there is not much wind in either direction. Which will win in setting the direction for oil markets in Q2? Your call, please. and we will take that to social media today. Narendra, of course, we have the end of the year coming with, as we started out our conversation, the financial year for India, but we also have the end of the financial year, but then the beginning of the run into the next major election in India, parliamentary election, and I'm wondering how those forces will come together. You would have to think to be supportive to this continued economic growth that India is having. Another reason to be confident that the Indian growth narrative will continue through the election cycle.
Well, first of all, you see, India's economy, a big part of Indian economy is now basically out of the government wings, in the sense is liberalized, and economy is on its own. The government, of course, when required, can come up with some incentives here or the policy, kind of intervention here and there. But otherwise, the economy is booming because, there are plenty of opportunities, and many, in manufacturing and services, and the demand, domestic demand, look at automobiles to motorcycles to, for, consumer products and so on and so forth. So I think that's what basically is pushing the demand up. And at the same time, oil prices being in the region of $80 per barrel, 82, 85, 80, that's something that the Indian economy can live with comfortably, and at the same time continue to grow. And my sense is that the oil prices are going to remain in this region, about $80 per barrel, at least for next 2, 3, 4 months. And let's not forget one thing. You see, countries like China and India and Turkey, by buying Russian oil, are keeping oil prices low globally for everyone, including the United States. So is India, China, Turkey, these countries are helping the Western countries to check inflation. Let's not ignore that aspect. And at the same time, you see oil price in the region of $80 per barrel, and discounted Russian oil is helping economies of countries like India, China, and even in the entire region in Africa, and also northern Africa, MENA region. So I think we have to look at different ways. And my sense is that's why we have seen G7 and even some of the Western countries which have imposed sanctions, they are kind of recalibrating without talking about it, without saying that, but they are recalibrating. They have realized, like today, for instance, I was looking at a report, the second biggest importer, according to latest data, of oil and gas, I'm taking gas also, is Germany. It's not India. You see, it's Germany, because there's gas. There's still 2 pipelines, shipping gas from Russia, even via Ukraine to Western Europe, non-stop. So I think there is a kind of realization. You can have your fight, you can have your geopolitical issue, you can have other issues, but when it comes to oil and gas, you try to keep, these things out of politics. I think, they may not admit it in public, but at the same time, first market cap of $60 per barrel, and then this thing, ignoring this thing. So many ships, many of these ships which are carrying oil from Russia to China or India and other geographies are actually Western ships, because 90% global shipping fleet is owned by Western entities. So these are Western ships. And they're at the same time, when you've got so many sophisticated satellites watching practically even a fly and a mosquito, I'm sure they know where the ships are going and where they're coming from. But this is by ignored, which I think is a positive thing. I think this realization on the part of the West that Russian oil should continue to flow, because that's good for the global economy, and more than that, it's good for their own economy. I think it's a good thing, and it's a good that is being recognized, and at the same time they're doing their own politics and all that. I don't want to get into that domain, but the fact remains, and that's important. As a human being, as a person on the planet, I think somebody needs to intervene and bring this war in Ukraine to an end. That's important not only for the emerging economies like India, who are so heavily dependent on
you would think one of
everybody.
Narendra Modi would be a very good candidate for that. He has that nice, much more neutral than Beijing, much more, aligned, and has the respect in Moscow. I mean, that could be.
I share your optimism,
and he's the president of the G20 at the moment. It's an extra.
Exactly. So and India is playing its role without beating any drum, and we are conveying it to both to Moscow and also asking exchanging notes with China, and Secretary Blinken was in New Delhi, and that was very much on the agenda, because we need to bring it to an war to an end, and then we need to bring them to the negotiating table and talk peace. Because economies of Africa, India, many others, we are suffering for no reason. We didn't go into any country, but we are the one we are paying heavy price. Somebody needs to bring peace to Ukraine. Everybody needs that.
Absolutely. And we need to bring an end, unfortunately, to this podcast and peace to Matt. But that final goal Arsenal scored, oh my God, I was jumping out of my chair, because, of course, there's one very critical thing that has to happen this year. That a team called City cannot win the league. So that was what a recovery by Arsenal, it has to be said. There's fight in that old dog yet. Let's get the survey result before we depart, and we post on social to see where the mood of this room is vis-a-vis the outlook for Q2. If we post that, we've got the Bulls tipping it a little bit. Supply concerns winning. If I was to go back around, I would have asked Matt about, where the fundamentals of inventories and spare capacity are, because they are looking tight and somewhat supportive to the supply concern narrative. We'll have to see where that goes, but we'll leave it there today. Narendra Taneja in India, thank you so much. Matt Stanley in the UAE, Isar Maliki in London, UK. Thank you for your thoughts and commentary this morning, with Brent trading a little bit higher, testing the upper limits of the range we've been dancing for the last few weeks and months. I think at this stage, that 86 getting up to 87. Will we go try knock on the door of 90 again? We'll have to see. If they talk it up in CERAWeek enough, maybe they'll get there by the end of the week with all that champagne. I'm sure they're popping. Thanks again. All the best.
Thank you.